So for my initial levels, one of the main things that I'm looking for in my trades is going to be the volume profiles, which we'll be coming into a bit later in the course for those of us in week 2. But it's going to look something like this. This is what a volume profile is looking like. It's showing us the amount of trading activity that's taken place at any given price level. It kind of shows us where the markets were happy to trade. Where do we have price acceptance? Now, for yesterday, in terms of the few things we look for on the volume profiles is the shape of a volume profile. Have we seen an overwhelming acceptance of price on one side of the day and not an acceptance of price on the other? Also levels of support and resistance based on a few different parts of that profile. Now, things I've taken away from this to begin with was yesterday was a D-shaped day. This is a balanced profile which shows essentially an accumulation of positions. We haven't really gone anywhere. We haven't traveled that big of a distance, but we've had lots of trading take place, right? There's potentially an accumulation of positions. What we generally then look for is if the market breaks through the high or the low of this day, that indicates that the accumulation of positions has been won by higher time frame buyers or won by higher time frame sellers. So not necessarily looking to trade inside of that profile for that day, but the following day, if we see a breakout above or below that session high or low, that can give us one of two things, either an entry to take a trade or confirmation on direction for the trade. For me, it was confirmation on direction. So D-shaped day, break to the downside. This is a bearish signal for me. We also had the Trump comments. These were negative. For now, this would be bearish. We're also in a bit of a downtrend. So if we're looking at the just general trend structure on the 30 minutes, we have obviously had this massive move up on his last comments, but in the current stretch of price, although very messy, we have started to form a bit of a very horrible but still downtrend. Right, we are creating the lows, we are creating the lower highs, lower lows. We've got the structure for this. So, bit of a downtrend, D-shaped profile breaking to the downside, and the direction, I suppose that was pretty much it. Now, obviously, I was looking at this a little bit later on in the morning, so I was probably here around 10 a.m. that I was looking for this trade. One of the main levels that I look for from these profiles is going to be areas of thin volume. So an area of thin volume here is just going to be within the volume profile, we have a dip in the surrounding volume, something like that. These are areas that we can look for, a kind of inefficiency in the market that we would expect to be filled and potentially providing some zones of support and resistance. As you can see, you can end up with several different levels within a day based on the previous day's profile, which is not always that useful, right? It's going to be a bit tricky to find which level do I want to trade around, where am I going to take the position, because there's just too many. So this is where you want to start to line up different confluences. So I've got 4 potential levels here. Obviously, in this case, I'm getting to the trade at this point, so these ones had already passed. But what I would want to see is what other levels of confluence have I got lining up around this particular level to say that this one is more likely to get a good reaction. Now, in this case, we had a bit of a fib retracement. So from the previous swing high to low, we had the 50% retracement holding around that low volume area and also a bit of a downtrend line. At the point of taking the trade, that would have been the third bounce, which for me, with extra confirmation, I'm not too fussed about that. So 3 levels here. The bias for direction. So I've got my bias for direction. I know I want to trade short because of these, mainly just these 2 reasons. That's the first thing we want to establish really, is where do I want to trade, in which direction? Then I just need to try and find out how am I going to execute this idea for the direction that I want to trade. I would like to be bearish for these 3 reasons. How am I now going to do this? So for that, I would be looking at my areas of interest, which in other words is just our support and resistance levels that we're looking at. So for the areas of interest in this case, we had previous day's area, low volume node. We have got the, I think I took it from a 15-minute fib retracement, 50% retracement, and also a short-term trend line. It's not the most well-established trend line, but that's okay. And a previous swing low as resistance. For those of us that have just gone through the trend lectures, a level that I personally quite like to use in a trend is in an uptrend. As that market starts to pull back within this trend, we're obviously looking for where does this higher low end up being. An area that I find to work quite nicely is going to be the previous swing high. So the previous swing high in an uptrend quite often gives us a good area of support to look for that bounce. And within a downtrend, the previous swing low provides a nice area of resistance as well. These can be good if you're stuck for any levels, right? Especially if this has been a big aggressive move. It's broken through any other levels of support or resistance, and we're kind of left with none, right? So previous swing lows and highs, good areas to look at. Now in this case, the previous swing low there, just coming in at the lowest point here, which we can see pretty much coming to that perfectly before bouncing off. So we've got quite a few different confluences here. We've got quite a few levels of support and resistance and a good directional bias. Price also reacted nicely to yesterday's point of control. It filled a large volume area. Let's have a look. Oh, nice, very nice, awesome. Very good bounce off that. Again, that can just help us to establish. Another thing I would want to see for directional bias at the moment is the price respecting bearish levels and breaking bullish levels. Just to show that at the moment, as this market's moving down, we are respecting levels in the direction that we want to trade, and also disrespecting levels against that trade. Now, this would help to tick that box. We are respecting the previous day's point of control, and we're breaking the previous day's low. So we've respected bearish structure, and we're starting to break bullish structure. A good sign that sellers at the moment are in control. Cool, nice. So for that was then, this is the higher time frame, right? So at the moment, all of this is being done on my higher time frame, which for me was 15 minutes. So higher time frame, we're looking for direction and the area of interest. I want to look for where am I going to trade and how am I, which levels where's a high probability area that if the market pulls back to this point and I get the interaction I want, there's a good chance we reject off this level. So from this time frame, I'm pretty much finding every aspect of the trade. I know where my target's going to be. I know where my stop loss is going to be. All I'm then doing on the lower time frame, for me this was a 1 minute, lower time frame for execution. So where to enter the trade off the higher time frame level. So I found all the points I want to bounce off of. The lower time frame isn't going to give me much more benefit of resistance and support or directional bias because I've already got that from my higher time frame, right? It's stronger on the higher time frame. So all I'm doing now is looking for where do I actually enter this trade. Now, a level of execution type that I quite like to use, and there's obviously a bunch of these, but this would be known as the trigger, which is the last thing to happen before entering a trade. So everything's happened, we've come off the level, we've got the direction. Now I need to see something happen before I enter the trade. In a basic format, we've looked at this on support and resistance, and we said, got our 30-minute, for example, support level. This is the level I want to trade off of. This price comes down to this level. And then when we start to interact with this level, I can't just buy as soon as it touches the level, right? At the moment, this market is moving down. And although I've got a good level of support, there's no real confirmation to say this market has started to turn around. We're not trying to predict exactly what's going to happen here. We're just trying to react to what that market's doing. And at the moment, this market is moving down. So I'm not interested on trying to pick the very bottom of this move, because I'm 80% of the time, I'm going to get run over in that trade. So what I'm actually waiting for then is some confirmation that this price has started to move up. This confirmation comes in varying degrees. Some people might prefer a earlier entry, let's say on the back of a candlestick pattern. Early entry, we formed a hammer candlestick. This tells me that buyers have stepped in on this level. We've seen just the candlestick pattern close, and then I've got straight into that trade. That, for me, I would consider this a very aggressive entry, but still valid because we have waited for this particular pattern before I take that trade. So although it is aggressive, it's still technically valid. Or what I personally prefer to wait for is some form of a break of structure. So when we're talking about a break of structure, this is just going to be breaking through a level of some description. This could be a resistance level. This could be a counter trend line. This could be a candlestick high or low. This could be a lower high or higher low within a trend. This could be a price pattern. This could be any number of clearly defined levels that we have to break out from before we get into that trade. Now, why I prefer this as a trigger and execution for a trade is it shows clear pressure from the direction I'm looking to trade, because we've at least had the ability to break through a small level, right? It doesn't have to be the biggest break in the world, but if we can bounce off this support and then break a small resistance above, that tells me that there is at least some buying pressure coming in here. If we never break that resistance, then we just evidently are not going to continue higher. So for me, 30-minute resistance then potentially, and then a 30-minute support, and then let's say a 5-minute resistance for the breakouts, and the trigger gives me that final bit of confirmation to get into this trade to then go up to the next 30-minute resistance above. So I'm trading between 30-minute levels, but I'm using a 5-minute level to actually get into this trade. So that's the idea of what we're looking at for a trigger. Again, there's a bunch of different things you can look for here. One form of trigger that I quite like to use is going to be involving trend or counter trend structure. So yesterday we had a look at trends and how they're confirmed. In an uptrend, counter trend and major trends alike, an uptrend should never break through a previous confirmed higher low. If this happens, that is now considered the end of the uptrend. Right? At this point, that is no longer an uptrend. In isolation, this would mean that the market is now sideways. But if this is a counter trend, we're in a longer term downtrend. The probable outcome here is that the downtrend continues. If we're in a downtrend, this price should never break above a previous confirmed lower high. And if it does, that indicates that the current downtrend has now ended. In isolation, again, that would generally mean the market's sideways. But if this is part of a counter trend, that would now indicate that the longer term uptrend is likely to prevail. So I use this idea as an initial thing to look for here. Now let's take this one that I've drawn on the left-hand side. We've got the current counter trend going down, and we've got our previous lower highs here. So lower high, possibly a lower high. Now if I go 1, 2, 3 here, which of these three, based on the rules of confirmation for a trend, do we think would be the lower high that we need to see broken first? Which one of these, 1, 2, or 3, confirms that that downtrend has ended? 1? Any advances on 1? 3? Any advances on 3? Cool. Got the whole range. So what we need to look at here then is for our downtrend, we've got our lower highs and lower lows and so on. Now, with the current lower high here, this is at the moment unconfirmed, right? So when we're looking at the trends, unconfirmed lower high, this is unconfirmed because it has not yet broken the previous low of that trend, meaning this could kind of keep going up and go up and then continue lower. So it's unconfirmed, and that means that the break above this first high here is technically not really that relevant, because it could well be just part of the counter trend, right? In a counter trend, it might do this and then do that. So number one, at this point, only because it hasn't broken through that previous low, which would be down here, right? It's turned off at this point. If it went there, then that would be fine. But since it hasn't, that would technically not be the lower high that we'd want to see. Now, number 3 in this case absolutely would be fine. So we have, this is the lower high, and it was confirmed by the break of that previous low. So technically, yes, number 3 would be a fine breakout to look for. However, this is now pretty far above the entry point or the bounce, and we've got a lower high in the middle there that is also confirmed and is sooner. So by the time we break out number 3, we've already broken this trend at the number 2. So number 2 in this particular example would be the lower high that, if broken, confirms the end of this counter trend. Cool. Now, the main problem with this is that the execution or the entry point for this trade is sometimes going to be pretty late. That lower high could be quite far up the counter trend, and we might be waiting for a fair amount of time to get into this trade. So it's a good level of confirmation because it confirms the end of the trend, but it is going to be possibly a bit late. So I add something else to this. I would be looking for the break above. Again, for some of us, we haven't gone through fibs yet. That's okay. And then I'd be looking for a pullback. So the trigger here is firstly break, counter trend, break, a confirmed lower high or higher low, depending on the direction within the counter trend. This confirms end of trend. Because that's a bit of a late entry, I'm going to draw a fib retracement from the recent low to the current high, or vice versa if we're in the other direction. This is going to provide me with a pullback entry, or an entry on the pullback to this fib. So look for a candlestick on retracement into short-term fib level. Now, the reason I do this is just because it's going to give a better entry price with the benefit of the trend breakout and confirmation on bullish structure being respected. So we get a few benefits of that, right? So if this market now breaks through this high, comes back to this fib, we form a small candlestick pattern, and then we get long. I wouldn't wait for that much confirmation on this. I wouldn't wait for another breakout. I would just wait for a nice wick at the bottom of any candlestick will do. This gives us the better entry price. So instead of entering at the top of the breakout up here, we've now managed to get in on a nice retracement. We've started to respect some bullish price structure, in this case a fib retracement, and we have also got confirmation that the counter trend has ended through the breakout of this level. There's a few more steps to this, obviously. It's a little bit more involved, and you do run the risk that this market does not pull back into that level. It just goes up and keeps going up. So you do run that risk. But for me, that's a trigger that I personally quite like to look for. Let's have a look back through that. Now, back onto the trade. That's what we essentially look for here. So onto the 1 minute chart, I was around this point. So at this point here, this market has rejected off the level of resistance. We have also broken through, in this case, it's a downtrend, so the counter trend is up. We have got a confirmed lower high, right? The swings that I'd be looking at here, we might be there to there, to there, to there. That's the uptrend. We have confirmed this. We've confirmed this higher low since that market breaks above the previous high. So the break beneath this low now gives us confirmation that the uptrend has started to finish or has come to an end. Again, the entry down here, especially on the close of a candlestick, is going to be pretty far down there. It's going to be all the way down here. So not the end of the world, but we might be able to get a better entry. So for this was drawn between the previous high and the current low that was made, and then waiting for a pullback into that fib retracement. Look for a candlestick. We then get a dark cloud cover, which is these two candlesticks here. So this one is a candlestick pattern that's called a dark cloud cover. It is just showing that this bearish candlestick has almost completely engulfed the previous, but not quite. A good candlestick pattern to look for. Fibs, we should draw a long trend. So for the fibs, it's always got to be a trending market. And it does depend on obviously the trend itself, but all a fib retracement is doing is it's saying in a trending market, the most recent move up with the trend is 100%, right? That is the move. And then the pullback of a counter trend would normally come back about 50% or 61.8% of that previous move up. So we'd say, okay, that's the move, that is 100%. This pullback is now going to be 50% of that previous move up. So for the fib retracement, all you're doing is measuring from the most recent move down up to the current move up to give us the pullback area down here. And then vice versa for a downtrend. In our case, this is the leg down. I'm going to measure the distance from there to there, which says if this market does retrace, it generally comes back in a healthy trend to about 50 or 61.8%. So then for that, it was close of the bearish dark cloud cover pattern, and that was pretty much it. I don't use at the moment quite so many secondary oscillator style tools. It is more just targeting the recent lows. Again, because we've got just quite a lot of comments coming out, unpredictable comments coming out at unpredictable times, I'm not so keen to hold a trade for the whole day. I'm not keen to try and run down to these bigger lows down here, although it might get there. My trade is just to the recent lows. I'd rather take my profit, get out, and then if another opportunity comes around, I can happily take another trade. But I'm not going to risk that coming all the way back up. So that's pretty much it for me. That'll probably be it for today. I'm not too fussed to rush into another position. I'd rather wait for tomorrow and then see if there's any other opportunities then. So that's what I was doing today. If you have any questions on that, feel free to ask away. If not, I'll just put this up here quick. All right, let me share this. These trades you're taking using CTrader. It's through a prop firm. I'm trading through Apex at the moment, but it's through TradeAvate. So I'm using TradeAvate as a futures-based prop firm sites. For those of us in week one, we're going to have a look at prop firms tomorrow. We briefly spoke about them before, but we'll go through it in more detail. We'll talk more about the challenges tomorrow morning. It is basically companies that will provide funding to traders. So if you can prove to them that you're profitable, they'll give you essentially their money to trade with. So you're not really incurring any risk. It's personally how I trade and the direction I try and lean people towards as they're getting started.